From Kansas State University, this is Agriculture Today. Eric Atkinson with you. And coming up today, K-State's Dan O'Brien will comment on the latest USDA corn planting progress numbers and how the corn market is interpreting those. And he remarks on what's been a good week for grain sorghum exports. That during Dan's weekly segment on the grain market trends. Then K-State's Mykel Taylor will talk about how the lack of basis convergence in the grain markets can hamper a producer's ability to successfully forward contract grain sales. She reported her research on this topic at that Agricultural Commodity Futures Conference co-sponsored earlier this month by K-State. And further ahead to update us on the Kansas Agricultural Weather Outlook, K-State's Mary Knapp. Straight ahead on Agriculture Today. Agricultural producers, landowners, and creditors, you have a partner in your legal and financial needs. Kansas Agricultural Mediation Services offers reliable, trusted information and guidance. Whether you need advice for ag credit concerns or are transitioning your operation to the next owner, Kansas Agricultural Mediation Services can assist you in making sound decisions for your business. To learn more, call 800-321-3276 or visit us online. Welcome once again to another Agriculture Today. For what's developed of late on the grain market scene, we turn once again to a grain market economist for K-State Research and Extension, who is based in Northwest Kansas, Dan O'Brien. And Dan, among the other things we'll talk about today, some encouraging news on the grain sorghum export scene and the wheat tour here in Kansas will begin next week. We'll reflect on that as well. But to the markets this past week, it's really the same notation, lethargic price movements and nothing to get pumped up about, that's for sure.
Well, lethargic or downright discouraging, really.
Yeah.
I think, Eric, that when you look at where we stood about a week ago, we're down about a dime or so on a number of these markets. Really, the chorus of analytics is indicating that there are a lot of sell positions in place on the spec side in the market. And, until further notice, they basically aren't inclined to unwind or short cover those positions. So as you look at some of the technical analysis, some chart analysis for, again, May corn, May soybeans, and May hard red winter wheat, particularly corn and soybeans, we're showing signs that they're oversold. I think that what you and I have been talking about for the last several weeks still holds, if anything, holds even more, as we have had some rainfall in important parts of the U.S. Corn Belt, forecasts for more over the next several weeks. Again, when you look at planting progress, it may all clear up, and the large planters that we have, and they are large, and we do have every motivated capability to get the crop in a quick manner, but right now in Illinois, last 5-year average, they normally have 17% of the crop planted, and April 21st, they had 1%. Indiana, 1% on April 21st, normally 5%. 10% on average in Iowa, 4% as of the 21st of April. Missouri, normally 33% planted at 16. North Carolina, of course, that's kind of out far to the east, 50% planted normally, now at 28. Again, you've got moisture forecast to come, and the likelihood of everybody in Kansas, I think there's a fair amount of progress going on for sure. But in some of these central and eastern Corn Belt, north central Corn Belt areas, a lot of moisture.
Now, those planting progress numbers will improve as of this past week, which aren't accounted for yet by the USDA. That'll come out next week. But even if there is a banner planting week, with the forecast projecting rather persistent and fairly hefty rainfall in those major growing regions this next week, really one has to wonder about when the market reaction will come.
Yes, and still the analysis done by our friends Todd Hubbs and Scott Irwin out of Farm Dock in Illinois that looked at the 3 I states and indicated that if they have tremendous weather, it takes 10 to 14 days to get those states' corn crops planted. Well, that still holds, but you have to get there to where you have that weather. And, with the moisture that we have, we'll be extending past the 1st of May off into that first week. And I think that, without question, the markets are looking at how quickly in past years we've gotten these crops in where we've and have noted that when we've been excited about this before, it hasn't occurred, but yet here we are. States that are pretty important don't have a lot of planting progress, rains forecast, and yes, there's still time to get the crop in, but there's more risk and uncertainty. I just wonder about how the prevalence now of algorithm trading that's more inclined to look at the end result and the expectation of what will happen and to account for or worry about riskiness in the market. I wonder if that has some fair amount to do with recent price moves. Again, rain makes grain until proven otherwise, et cetera, especially when you look at how grain markets have tended to reflect uncertainty and risk with regard to crops being planted, et cetera, through May and on into early June. Well, now, gosh, it looks and feels like, in essence, we've just assumed we're going to have a large crop period, and this is only April. So, if anything, if these markets are oversold to the downside, then if risk does occur later on, then you'd see a response to the upside and questions as to why didn't we account for that or think of that earlier.
Mm-hmm. You're saying it could be an abrupt rally, perhaps.
Yeah, we're assuming the odds are with that we'll have large crops, no problem, and that crops get planted, everything will develop, and all these worries will go away. And that's frankly where the bids are right now. If that doesn't occur, or if there are questions that arise throughout the summer that shake that predominant assumption right now, then we'll be in for some volatility. But as of right now, you look at May corn at 347, D's at 377, and ask the question, well, where does D's corn go if crop comes through, et cetera, and there's no problem? Well, it's probably 350, 340, something like that. So we're not that far from where we'd expect D's corn to be at harvest time if we don't have any crop problems. But still we have several months of pretty important growing conditions to go through, and we don't have the crops planted yet. That is my opinion anyway with regard to where things are at.
Well, looking for silver linings, always. Dan, let's talk about what's going on in grain sorghum sales. The export numbers of late have lent some mild optimism to that trade.
For the first time in several weeks, months, we've had a grain sorghum sales figure of much more than the pace needed to actually meet the USDA's projections, about 3.6 million bushels for the week ending April the 18th, and a noticeable jump in new crop sales, about 10 million bushels. So that's to the positive side. And I think over the last several weeks, if you look at grain sorghum bids, you've had some of the export-oriented elevators in the eastern part of the state with pretty healthy bids, even yesterday's report. And earlier this week, we had about a 5-cent basis, 5 under May in Topeka. That's better than bids anywhere across the state by 35 or 40 cents. It's a very export-oriented location. And, gosh, when you've got one bid standing out like that, it makes you wonder about filling export orders. So we'll see what happens. We also had a pretty good week on hard red winter wheat exports. Got up to about 15.4 million bushels and had been running below 10, more like 4, 5, 6 for several weeks. So it's nice to see hard red winter wheat, what we deal with here in Kansas so often. Well, always in Kansas, I guess, for the wheat we grow, to see that jump up. It's interesting here on April the 14th, with about 5 weeks left in the marketing year, till we get to the end of May, that we're about 328 million bushels of hard red winter wheat actually bought and shipped together again, so additional sales on top of the shipments to get to that. And that's just about to USDA's projection of 330 million bushels. So I guess here we have the Kansas Wheat Tour coming up next week, and if anything, I think there's some merit in talking about how here recently we've had some better movement in the hard red winter wheat area, and maybe that bodes well for the future.
Well, you bring it up. The Wheat Quality Council will be hosting its annual Hard Winter Wheat Tour, which will traverse through Kansas as well as adjoining states over the middle part of next week. Do the markets attune to the findings there to any great extent? What's the historical reaction to that tour?
Well, the tour participants, and that's probably the best way to categorize them, because it's a mix of people.
Right.
Unless they find damage that we're not anticipating in the field, they'll probably find a lot of good and some bad. You look at the ratings as of the 21st of April for wheat condition in Kansas, 10% excellent, 47% good, 32% fair, 8 poor, and 3% very poor. So they'll find some fields, if these ratings are true, in parts of the state that won't be as good as others. Now, it looks like 57% good to excellent. There, a lot of it will be pretty good. And I think as they come through, as we hear about potential concerns regarding wheat diseases with the moisture we've had, that will be out in front of them. So I don't doubt that they'll come up with a good conservative estimate with the idea of trying to account for, or at least give lip service to the uncertainty out in front of us. But any early tour like this, you'd be surprised to see a big market move from it unless they were coming into a situation that's just completely wiped out in the state, a lot of winter kill and all of that. I don't think that's the case in most of the states. Mm-hmm. So we'll see. We could be completely surprised, but the judicious attitude to have is that we don't anticipate a lot of market-changing news coming out of that report, which means that if we do get something out of it, then maybe there's more potential than we thought. But right now, it's not anticipated to be a big market mover.
Very well, then. Again, Dan's full notes on the grain market trends, including much of the information that we tapped into right here in this visit, can be found on the agmanager.info website. Again, agmanager.info. As always, Dan, we appreciate the remarks. We'll talk again next week. Thank you.
Thanks, Eric. Take care.
Grain market economist, K-State Research and Extension, Dan O'Brien, with that input on the grain price trends. In a moment, after the break, we'll continue on this grain market theme as we'll visit with another K-State agricultural economist about basis convergence and how that relates to forward grain contracting. That's next here on Agriculture Today.
Hamburgers, roast, ribs, steak, or whatever you prefer. Beef, it's what's for dinner. Kansas cattle farmers produce 7.5 million head of cattle per year. It takes about 7 tablespoons of peanut butter to get the same amount of protein in 1 serving of lean beef. Support your local Kansas farmers and ranchers. Eat beef. This message was brought to you by the K-State Animal Sciences Leadership Academy participants.
We're back now on this Agriculture Today. And to pass along to you more information that was shared at that major conference that Kansas State University co-sponsored just a couple of weeks back on agricultural commodity futures trading, the Commodity Futures Trading Commission and K-State partnered to host this event in Overland Park. And our guest now talked about an item that's been on the burner for a time now, and it's very important to agricultural producers as they market particularly grains, basis convergence, and how that relates to the opportunity to forward contract grain sales. Mykel Taylor is with us, agricultural economist, K-State Research and Extension. Mykel, you've been engaged in this basis discussion for quite some time, but what was the impetus behind this particular presentation?
Well, this presentation was really based on giving the conference attendees the perspective from the farmer and what basis convergence has meant in terms of their ability to effectively hedge a good price for their grain, and also what it's meant for forward contracting for both producers and elevators. So we just wanted to give them that perspective because I think that sometimes traders get pretty caught up in their world, which is understandable, and we wanted to give them the perspective from the farm side.
Now, as part of this, you pulled together information on basis trends in Kansas to get at that convergence issue, and you might capsulize what you found out about that.
Sure. We wanted to look at hard red winter wheat basis. We used Salina for our location, and what you could see, if you could see a chart on the radio, right, which you can't, but that basis went from being relatively stable in the early 2000s, and starting in about 2007, it started to weaken, and we stopped having convergence where basis comes back and meets up with the futures price around harvest. That stopped happening for a couple of years. Then there was convergence for a while, and then again in 2011, it stopped stopped converging. And what that basically means is that the cash price and the futures price are no longer as connected as they were, and they diverge from each other. And usually it means, in Kansas for wheat, it means that cash price has fallen well below the futures price. And so we start to wonder, well, why is that going on? Because we expect that those cash and futures prices are generally move together.
Mm-hmm. Do we know why that's going on, or is that still a question to be?
It's generally it's a storage rate issue, having to do with the cost of storage and whether or not you're giving the holders of grain the incentive to move that grain. There's lots of conspiracy theories about it, but I think that generally we see the problem often when we have too much grain, and we're looking for a good place to store it because people want to wait for a better price, and so they're sitting on that grain and not moving it.
And we'll come back to that in just a second. But relating this then to the mechanism that's known as forward contracting, which probably bears definition here, just to be sure.
Sure. So what I mean by a forward contract is that you have made a deal with the elevator to deliver a certain amount of grain for a certain price at harvest. So this is pre-harvest for contracting is what we mean by that. And the good aspect to it is that once you set that price, you know as a producer what you're going to get for your grain when you deliver it to the elevator. You're no longer worrying about where cash prices are going. You're no longer worried about your hedge and what's going on with the basis. So it takes away both price risk and basis risk. And for that, oftentimes there's a premium, risk premium built into that forward contract. So you basically take a little bit of a hit on the cash price that you receive in order to transfer that price and basis risk to the elevator. And
it is, as you point out in your presentation, difficult for elevators to establish that price for forward contracting, given the basis trends that you just discussed.
Right. So when basis is behaving as we would expect it to, then we can predict it with relative accuracy, and the elevators sort of know, okay, we expect this basis at harvest, so we can back into what those forward contracts need to be priced at. If you have non-convergence in the basis, then all of a sudden it becomes very hard to predict where that cash price is going to be at harvest, and they run the risk of either pricing them too high and not having a lot of volume of forward contracted grain, or pricing them too low, and then basically farmers make money off of their forward contract, and elevators therefore lose money on that contract.
It's very intertwined, to say the least, but.
Yes.
Part of your mission here was to share what you've discovered about the costs of forward contracting on the producer's side, and this was handled in a study you conducted? What?
Yeah, so we looked at about 12 locations across the state, so we got good geographic coverage, and what we tried to do was figure out what the average cost of forward contracting was to producers. And not surprisingly, when you take something, when you have a basis and it's relatively stable and everybody kind of knows where it's going to go, then the risk that you're transferring to the elevator through that forward contract is much less, and they don't charge you as much for it. When you go into periods where basis volatility is high, then the elevators are going to try to cover themselves and charge a higher risk premium, and so the cost to producers of that pre-harvest contracting goes up. And what we showed was that in the relatively stable basis years, the average price of a forward contract in terms of that risk premium was between 8 and 10 cents a bushel. It jumped up to about 30 cents a bushel in the periods with high basis volatility.
So we're talking considerable cost.
Right. And even as a proportion of the overall wheat price, it was still much higher.
So that puts into perspective just what the issue is here. Then you discussed a mechanism that's been brought forth that is purported to address the lack of convergence in the wheat market in specific here, the variable storage rate as an instrument for convergence here. You might explain what that is.
Yeah, so the variable storage rate, or the VSR, is a way of pricing storage that, without getting too technical, basically tries to adjust the storage rate to reflect market conditions and to reflect the financial full carry of grain. And so we spent a little bit of time talking about how that's calculated, and then went back in time and said, well, what if the VSR was in place? Because previous to the VSR, we had a fixed storage rate, and then we had a seasonal fixed storage rate. So we've been messing with the storage rate in hard red winter wheat quite a bit over the last 10, 15 years, trying to find that sweet spot that keeps basis from diverging. It's been moderately successful, I guess. If you had put the VSR in place, you would have had a couple of periods of time where basis really diverged, and under VSR, the storage rate would have gone much higher than it did under the fixed or under the seasonal storage rate. And so we can't know exactly how the market participants would have responded to that, but we do think that it would have put downward pressure on that volatility and maybe brought the basis back into line a little bit better than the fixed storage rate did. Now, we've had the VSR in place for a little over a year, and it hasn't necessarily been the cure-all, but it is something that is continuing to adjust, and the market participants are getting used to it, and hopefully it will make some adjustment. The advantage to the VSR, I think, that we have to keep in mind is that when basis convergence is not occurring, and you want to change the storage rate, if you don't have a dynamic adjustment like the VSR, which changes automatically, then you're waiting for the CFTC to make changes or to ask the CME to make changes, and that can take up to a year.
It's not nearly expedient enough for what's happening in the market.
No, and so the VSR has that advantage of being dynamic and that it will change, as conditions in the market push it that way. So I think that it's got more potential to be effective than a fixed storage rate or a fixed seasonal.
But your conclusion here is that something like the variable storage rate can, in fact, positively affect that cost factor for the producer.
Right.
For forward contracting, that is.
Right. We think that it can have a positive impact on the cost of forward contracting. Now, every decision that's made in these markets has trade-offs. And so one of the trade-offs is that while we think it can benefit producers through the cost of forward contracting, there's also the fact that it makes the cost of storage uncertain. And so for anybody that's holding wheat, they don't know if the VSR is going to change or whatever. So there's these economic trade-offs in the market. But to us, it was important to convey that cost of forward contracting and just let people know that, okay, you make a change to something like the VSR in the wheat futures market, it has trickle-down effects to producers.
And this is, to point out, Michael, an ongoing dialogue. This issue will be, again, discussed at length for some time. But this lends some clarity to the issue as well.
Well, I think so. I think, again, we'll keep watching VSR and see how it works, and not to say that it's the end of the adjustments to the wheat contract. We might see adjustments in the future as we sort of track how well VSR does with grain basis. But, yeah, I think that the basis convergence, it used to not be that much of an issue, and now it's a repeating issue, and so we need to deal with it and continue to monitor it.
We'll keep up the good work along this line. Thank you, Michael.
You're very welcome.
Mykel Taylor, agricultural economist, K-State Research and Extension. She talked on the topic of basis convergence and the resulting impacts on forward contracting grain at that recent Agricultural Commodity Futures Conference, co-sponsored by Kansas State University and the Commodity Futures Trading Commission. We'll be back with more on this Agriculture Today after this break.
Did you eat today? Thank a farmer. A way to get more involved in agriculture is through 4-H and FFA. Through 4-H and FFA, we have been given multiple opportunities to grow as leaders and learn more about agriculture.
You can learn skills related to jobs, public speaking skills, and you get the opportunity to travel around the country and meet new people.
If you want more information about getting more involved in 4-H and FFA, visit them on their websites at kansasffa.org and kansas4h.org.
Coming to you from the campus of Kansas State University, this is Agriculture Today, and welcome back. Eric Atkinson here. Now today's agricultural news headlines for you, courtesy in part of DTN. The EPA would be forced to return to using criteria that it used prior to 2017 in granting small refiner exemptions under the Renewable Fuels Standard. The Advanced Biofuels Association is arguing that the broader criteria used by the agency is negatively impacting the industry. We want to return to normalcy, the words of ABFA President Michael McAdams telling that to Reuters in the wake of his group filing suit in the U.S. Court of Appeals in Washington. The EPA has maintained it is living up to the terms of a U.S. Appeals Court ruling back in 2017, which found the agency had been too narrow in its criteria on small refiner waivers. The ABFA contends that the EPA has changed its process of assessing the requests, making it easier for refineries owned by major oil companies to get the waivers. ABFA wants the court to order EPA not to grant any waivers for the 2018 compliance year until a decision is made in a suit that the group filed challenging the 2017 waivers. The group charges that EPA granted waivers to refiners that the government believed would be remaining competitive and profitable if they had complied with the RFS in 24 out of the 48 recent cases. Now, under the RFS, refiners with capacity of 75,000 barrels per day or less can apply for those waivers of their RFS obligations if they can show meeting those requirements would create undue hardship. EPA Administrator Andrew Wheeler has cautioned that he will continue to grant the hardship waivers as that is required by law under the RFS. Bayer AG's shares rose over 3% yesterday on better-than-expected results, giving that company a brief respite ahead of today's potentially unruly shareholder meeting as investors grow impatient with the company's legal woes in the U.S. Bayer reported an above-expected rise in adjusted earnings, driven mostly by the integration of Monsanto, which it acquired for $63 billion last year. But Bayer said the number of lawsuits attempting to tie Monsanto's Roundup herbicide to cancer rose another 20% since late January. As of April the 11th, 13,400 plaintiffs have claimed that the herbicides containing glyphosate had given them cancer and other illnesses. Bayer has so far lost the first 2 Roundup suits in California. A third trial is underway there, and 4 more are scheduled to begin this year in Missouri and Montana. Some shareholders are now openly criticizing management for underestimating the acquisition's legal risks and are expected to vent their frustration at today's annual general meeting in Bonn, Germany. Bayer's position has been that there is overwhelming scientific evidence that glyphosate is safe to use. It is appealing the verdicts and continues to defend the merits of the Monsanto deal. However, its chief executive, Werner Baumann, and his fellow directors will face a grilling today about the merits of the deal and how they're working to contain the damage. That's according to several large shareholders. And the International Grains Council has raised its forecast for global grain production for the 18-19 season and lowered its outlook for consumption. That in its monthly report published yesterday, evidence that supply is strengthening relative to demand could add to pressure on grain prices, which have fallen this year amid concerns about the world economy and expectations of strong harvests. The IGC expects output of 2,100 million tons. That's a rise of 3 million from its prediction in March. Higher corn output in Argentina and Brazil was the main reason for that increase. At the same time, the IGC expects total grain consumption of 2,165 million. That would be a decline of 5 million tons from its March report, driven by corn use in the U.S. Combined, those adjustments led to the IGC to lift its prediction for carryover grain stocks by 8 million tons up to 611 million tons. That would represent still a fall of 36 million tons from the 17-18 season. You're listening to Agriculture Today, and next up for you this week's edition of the Kansas Wheat Scoop. Standing by with that is Marcia Boswell. Marcia?
What's a better way to spend a Saturday than sampling breads, learning to bake, chowing down at food trucks, having fun and learning at a kids' fun zone, the chance to win a KitchenAid mixer, and watching a live Food Network-style baking contest? The National Festival of Breads is Saturday, June 8th at the Hilton Garden Inn in Manhattan, and it's all of this and so much more. Did we mention that the National Festival of Breads is free to attend if you bring along a non-perishable item for the Harvesters Food Network? Talk about the perfect Saturday. The festival will feature activities for kids of all ages and baking workshops for all skill levels. From face painting to making pizzas in a bag and bread shaping demonstrations to workshops with cookbook authors, there's something at the National Festival of Breads for the entire family. Speakers for the event include Brian Hart Hoffman, editor-in-chief of the Bake From Scratch magazine and creative officer at Hoffman Media, Chef Tess, a bubbly media personality, corporate chef, and cookbook author, Libby Treadway, Bake for Good kids instructor for King Arthur Flour, and Charlene Patton, consumer spokesperson for the Kansas Soybean Commission, executive director of the Home Baking Association, and a recognizable TV guest. Everyone loves to sit on their couch and tune in to the high-stakes, kitchen-fueled drama of cooking shows. The National Festival of Breads brings the entertainment of a live baking competition, although admittedly with less manufactured drama, to your backyard. 8 finalists from around the country are competing to find America's best breads. There are 2 divisions for the 2019 competition, home bakers and food bloggers. Attendees are welcome to watch the masters at work, sample their winning products, and take the recipes home to try themselves. Kids will have activities galore at the National Festival of Breads. The love of being in the kitchen develops early, and the National Festival of Breads wants to help your children develop that passion at the festival. Hands-on kitchen activities, face painting, balloon animals, fun photo ops, mascot appearances, and the chance to win a John Deere toy harvesting set with combine tractor and green cart will make this a memorable day for any budding baker. Honoring the servicemen and women of the U.S. is a priority at the National Festival of Breads, and this year's festival will up the ante. Military appreciation gifts will be given to the first 200 military families with military ID, and special guests will be on hand to welcome our nation's heroes. Title sponsors of the event are Red Star Yeast, King Arthur Flour, and the Kansas Wheat Commission, the ultimate resources for your delicious baking habit. For more information about the National Festival of Breads, tentative schedule, full speaker list, and more, please visit nationalfestivalofbreads.com. For Kansas Wheat, I'm Marcia Boswell.
Thanks, Marcia. Next up, K-State's Mary Knapp on Kansas agricultural weather. You're listening to Agriculture Today.
While many people know hunger is an issue in developing countries, it is also a problem in our own backyards. In 2010, 1 in 7 Kansans struggled to put adequate food on the table. 2 K-State research and extension programs are tackling this problem. The Family Nutrition Program and Expanded Food and Nutrition Education Program reach thousands of Kansans in more than 70 counties. They learn how to eat healthy with a low budget. For more information about these programs, visit ksre.ksu.edu.
For you now on Agriculture Today, the latest out of the Weather Data Library here at Kansas State University on Kansas agricultural weather. Of course, providing that update, Mary Knapp, climatologist with K-State Research and Extension. As we look back over these past several days, Mary, compared to the balance of this spring up to now, it was a relatively dry stretch for most of Kansas, you tell us.
Right. It was a dry stretch and a relatively warm stretch, which has also been something that we have been lacking as we've gone through our springtime season. Not everybody was dry, though. The 2 exceptions were the South Central and the Southeastern divisions. They had a very widespread ample rain with that. In the South Central, it averaged just a tad over an inch, which is about 1.5, a little bit better, 163% of normal for the week. And that brings them up to 81% of normal for the year to date and about 65% of normal for April. April, on the whole, has been dry. We look at the Southeast, they average 1.12 inches, and that is 118% of normal. So again, those were the wet spots. The rest of the state saw generally less than 1/4 of an inch. East Central was a little bit closer to that Southeast with 0.61 of an inch, but you get out in the West and all 3 Western divisions were averaging less than 1/10 of an inch.
One thing you can say about it opened up the opportunity to advance field work, which was sorely needed in parts of Kansas.
Right. And that was, we're beginning to hear some rumbles of people that were able to get into the field, and then that surface is drying out too quickly to be a desirable planting bed. But it's still not nearly in the area of being of a concern yet. When the latest U.S. drought monitor leaves the state completely drought-free, there's no abnormally dry conditions. If we look at the Mesonett's soil moisture profile, the 2-inch level, as we've noted, is showing dryness. You get down to the 4-inch level, that dryness is more concentrated in the central parts of west central Kansas, but you get down below that and we're back to the very, very wet soil. So it's slow drying out beyond the surface level. We'll have to see what comes with this weekend's rains.
Right, which we'll get into shortly here. Presumably soil temperatures are on the rise.
Yes, the soil temperatures have warmed up nicely. We've got widespread averages in the mid-50s, which is getting into that desirable corn planting temperature. And again, those are weekly averages, not the individual daytime temperatures. So that has been very nice in improving that planting bed for those spring-planted crops.
Well, let's get right to it. The rain chances will amp up here around a fair part of Kansas in the days ahead, starting with this weekend. What's expected to happen?
Well, for Friday into Saturday, we've got a fairly good chance, particularly in the eastern part of the state, for moisture. And then those chances continue to ripple through the state Sunday night, Monday, Tuesday, maybe even into Wednesday. When you look at the quantitative precip forecast, where it looks at how much moisture might fall from those storms, widespread 1.25 inches or greater, particularly from the kind of the boundary between the western divisions and the central divisions. As you get to the eastern divisions, particularly in east central Kansas along the Missouri border, they may see as much as 4 inches, depending upon how the storms develop. Get into those western divisions, say from the Elkhart up to Tribune up to Goodland area, you're showing much lower amounts. The 1/2 inch is going to be an optimistic total for them. But again, even a 1/2 inch, if we could get that, will be helpful for that wheat that's moving into that active vegetative growth and needs more moisture. Anybody that's gotten their spring crops in the ground will welcome moderate rain to get that started nicely.
The temperatures may dip down into the 30s in parts of especially northwest Kansas with this system moving in.
Right. At this point, there's no freeze advisories out for that region, so the temperatures may drop into the 30s but are not likely to drop below freezing. The western divisions are going to be most at risk for those colder temperatures simply because higher elevation and drier conditions allow that cold air to penetrate and not moderate as quickly as when you get into the eastern areas of the state. But again, not at this point looking at freezing temperatures. We are also expecting the temperatures to be more moderate and seasonal, not as many of the high temperatures up in the 90s, which we did see last week in the central areas of the state.
All right. And next week, again, more chances for rainfall as we transition from April into May. The 6 to 10, 8 to 14 day are saying somewhat the same.
Right. Both of them call for an increased chance of wetter than normal conditions. So this dry period is looking to adjust into a wetter pattern at this point, and they have released the May Outlook, and the May Outlook also calls for a slight chance for wetter than normal conditions. We'll have to see how that develops because the outlook when we looked at the beginning of April was for April to be wetter than normal, and that did not materialize. So we'll have to see again how that month ends. Do we actually tip into that wetter than normal with the rainfalls that we're expecting to end the month? And how does that start out for our May? It should be noted they have had quite a bit of moisture to our south. Oklahoma and Texas have had a lot of moisture. That reduces the chance that we'll develop a heat dome that would block off that Gulf moisture, and that would, again, signal a drier pattern. At this point, not looking at that. Again, it's looking favorable also.
And importantly, seasonal temperatures ahead. Saying that because, if we recall this time last year, the transition from winter to summer was abrupt.
Right. We had the coldest April on record, followed by the second warmest May on record. A very, very sharp contrast in temperatures. At this point, we're looking at a more gradual. We've already had a more moderate April, and it looks like that we're going to ease into May in a similar fashion, which would be very welcome. Again, we can get by with a little bit less moisture if we don't have those extreme temperatures to increase the evaporative demand.
Very well. Mary, enjoy your weekend. Thanks for coming over.
Thanks, Eric.
Climatologist Mary Knapp of K-State Research and Extension. We appreciate you tuning in and bid you a good weekend as well. Eric Atkinson here for Agriculture Today over this, the K-State Radio Network.